But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Hey, good evening. Welcome back to the Junius Maltby channel for another boring installment on the most boring channel on YouTube. Good news today, gold and silver both breaking those psychological barriers. We'll get right to that. We talked about this last night. Knocking on 1600's door. Silver constantly trying to fight for that 18 mark. And both metals reaching those levels today. And it's going to be a quick one today. This is just a fast run through the news. I know most of you probably already saw this information and you're just curious what the take is here. Most of you know the story already. And once again, another beautiful look at freshly poured gold bars coming to us from Russia there on the screen. Big gold trade bars, about 430, roughly those are about what, 430, 450 ounces per bar there. Of course, gold made headlines today, powering through 1600 like a hot knife through butter. Why it topped 1600, hitting a 7-year high. And of course, some people saying it's from the coronavirus, but we're not buying that here. I don't believe it. And by don't believe it, I mean I don't believe that the coronavirus is the entire reason why gold is making the moves that it's making now. Gold was making these significant bullish moves before anybody around was even talking about this COVID-19 or whatever the heck they've labeled it now, this virus. As you can see, let's take a quick look at the Dow because we saw that last headline there talking about gold breaching 1600 while the Dow fell. Well, the Dow did fall a little bit today, nothing to get too excited about. It dipped. As you all are very smart here on the Junius Maltby channel, you know that 165.89 drop is not what it used to be. Of course, when you're looking at a Dow of 29,000, 165.89 is just 0.56%. So it's a 0.5% off, not a big deal, even though for some people 165 points sounds like quite a bit. It's just not what it used to be. If you had a Dow of 10,000 and you fell 165.89 points, it'd be a much bigger percentage of the entire Dow. However, you look here, look at a 5-day chart for the Dow. You've got, going back again, 5 days, a little bit of a bearish trend there, especially if you compare it to some of that of the precious metals. Of course, they tend to sometimes go in opposite directions. And then there's those times where the Dow and the gold actually rise together. But here, we're looking at a 5-day overall downtrend for the Dow. It just seems like every day you pull up a gold chart, on the 1-year gold chart, even a 5 or a 10-year gold chart, it looks better than the day before. And here we are looking at a 1-year gold chart. The best part about this one is that 1605. We only saw that number once this year. In the last 7 years, it was the other day. Remember when it did it in the night? It really just kissed the 1600, just touched on it, and then retreated from that point. But it didn't have to rise too far today. Again, when we closed down yesterday, we were only like $11 shy. I don't remember the exact, what was it, 1589, 1590 there was the day's high. Looks like the day's low today was 1602.40. The day's high is 1607.70. And again, the 1-year percentage change. This is a big thing to look at for gold because it's incredible. 18%. It's up 18% in a year. And that's one of those numbers when you talk to bears, the gold bears, or any of the anti-gold crowd. A lot of financial advisors treat gold like it's a pox. And it just comes from, where that comes from, their mindset. It's beyond even a boomer thing to do. To be anti-gold or to think disparagingly of it and view it as the archaic or barbarous relic, as some have termed it, is just it's a very ill-informed mindset. And these people don't understand the premise behind it, and they're throwing off 7,000 years of human relationship with gold as the ultimate settlement of account, the ultimate extinguisher of debt. You know, you don't have to take it from me. Just talk to Professor Antal Faget, Alan Greenspan, Ferdinand Lips, anyone at the von Mises Institute. And the list goes on. You know the case. The case for gold is strong. And it's just incredible to me that people can turn the other way and look away from it and discount and diminish the performance of gold in the long term. And again, I'll reiterate, it's not an investment, it's a hedge. You're not getting a dividend. The good thing about gold is it just doesn't go to zero. It doesn't owe anybody anything. It doesn't have any of that counterparty risk. It's not going to default or go bankrupt. It's the ultimate store of wealth. Take physical delivery, as we always talk about, and you know the reasons for that. Now let's take a look at gold's little brother. And remember this. Now remember the 18.1%. So for 1 year percentage change on gold, we're looking at 18%. Let's take a look at silver. Here we have silver closing up 10 cents today, up 0.5%, $18.25. Finally breaking and staying above and closing above the $18 mark. It's great. 1 year change, a little less than gold. So the 1 year percentage change for silver is 12.04%. Again, somewhat of a chaotic chart. The volatility of silver always kind of stands out when you look at it on a chart like this. Or at any point, any measure of time, it just seems volatile. And we talk about that, but it's almost setting up like it's got a little bit of support there around that just above the 16 mark, 1650-ish you could call it. I mean, that was that low there, kind of bounced off it. It's holding up in that 17 range fairly well and building in with gold set to go skyward and really perform this year. I think it's going to carry silver with it very well. We've talked about gold hitting the 2,000 mark. Definitely possible. You just wonder when the day is going to come where these two metals are making front page news and you're at the barbecue and your Uncle Daryl starts in on trying to explain to you how he just made the best investment decision by buying in on gold at $5,000 an ounce and locking in on silver at $150 an ounce, and how he's expecting it to go so much higher. And then you have to look at him and explain, Uncle Daryl, I've been stacking since the year 2000. All right, we'll close out tonight by throwing some heck towards the paper gold guys once again. We talked about it a little bit last night. This is a lengthy article, and if you really want to get into the weeds on it, you can Google it, look it up. It's your cup of tea if you really like the boring stuff, because it's a boring one, a lot of charts. But we'll just hit the summary on it real quick. Watch gold futures. A run on bullion banks may be imminent. We've been hearing about bullion bank runs for a long time. I've heard about them ever since I started stacking metal, and even probably before that. I don't buy it all the time. I think these guys are that good. They really are that good. They never get held accountable, and no one ever calls them on their bluff. And let's put it this way. You'd never want to sit down and play poker with anyone on the COMEX, because I think these guys are pros at just hiding their face, hiding their hand, and somehow pulling an ace out of their sleeve at some point when nobody's looking, because they never get caught. And the question's always going to remain, do they actually have the physical if the certificate holders demand delivery? Open interest in gold on the COMEX futures and options markets remains near record territory. Historically, the gold price rises with rising open interest and falls as contracts are covered and open interest falls. Since last May, however, with open interest hitting new records, gold has been rising with open interest but hasn't been falling significantly as open interest relatively falls. This situation may be putting the market-making bullion banks in danger of a short squeeze. Now let's check out the chart he included here, because that's where we're going to close out on this video tonight. First, combined open interest remains at extremely elevated levels, never seen on a consistent basis before last summer. Open interest refers to the number of futures and options contracts open in both gold at the COMEX, NYMEX, below is the chart of combined open interest going back to 2006. Now check that chart out. Look at it just spiking right now. It's unbelievable. Definitely some abnormal behavior, and he gets into it. If you go check out his article, the title of what you just saw, you can look it up. But, is there going to be a squeeze on the COMEX boys this time, especially with gold prices going up? We saw some of the numbers last night when we talked about the ETF gold, the paper gold world. And we also saw the information about the Royal Mint getting into that market as well. The big thing last night that stands out when I was talking about the paper gold world was the amount of physical these guys have to end up purchasing and acquiring in order to back their contracts. And again, remember, these guys will sell contracts without actually having the physical on hand, and there's always that saying of, these COMEX boys like to sell gold that's not even out of the ground yet. And that's always an interesting topic of discussion on how the COMEX operates, and these guys, the paper gold boys, selling certificates for gold that they don't even hold, don't even own. I know it's a pretty complex process, if you ask me. I mean, I don't know. I'd love to be able to sell stuff that I don't own or don't hold and don't have yet. It's an incredible business model that they came up with to make a quick buck. And again, the only reason they survive is because no one ever calls their bluff. These guys are experts at coming off as, the slick back, honest boys at Wall Street that never do anything wrong. We all know that's not the case. We know how it works. We've seen what takes place in The Big Short. You know how the mortgage market worked, mortgage-backed securities, and we're just waiting for the next shoe to drop with the derivative markets. And we'll see how that all turns out when that starts to unravel. But the bailout bubble, we're still in it. Peter Schiff had pointed that out, talked about it. We're still living off of the fat of all of the stimulus and the quantitative easing that took place since '08 till now. And again, fiat currencies, sometimes their death throes last a little bit longer than people would expect. But the dollar's days are numbered. It is the leper with the most fingers left, and that's the only reason on the world stage in the forex markets the dollar's doing what it's doing and performing the way it performs. It also happens to be backed by, you can't say it without laughing, the full faith and credit of the United States. We all know that the dollar, being the reserve currency, is only the reserve currency out of sheer force. If it was left to competition with competing currencies, even domestically, if you had the ability to have competing currencies in the United States and even on the world stage, the dollar would die a pretty swift death and be rejected. And we've already seen it slowly starting to take place with nations distancing themselves from dollar exposure. And even Warren Buffett himself. I mean, come on now, the guy, the Wizard of Omaha, whatever. So the worst thing you can possibly hold in the entire world, the worst thing you can hold is U.S. dollars. If you're holding dollars, your wealth's on fire. So get rid of it. And I would argue that that's the same for dollar-denominated assets or equities. Anything in dollars, valued in dollars, is going to suffer when the dollar does. So, distance yourself, get away from it, get out of it as quickly and as best as you can. It's obviously impossible because you can't go to the grocery store without dollars, at least where I live anyway. But again, good day for the metals. Of course, they're going to retreat. They always do. They always can. I would not be surprised if tomorrow they beat silver back down below 18 just because they like to do that. Silver tends to get beat like a little baby seal on the ice for its pelt. Sad image, but true. Gold, I wouldn't be surprised if they beat it below 1600. But we've been there now. We've been there. We've closed at those levels. We're going to get there again. And of course, from that point, it's only going to go higher. Take care. Have a good night. And you know what? Go sip some good tea and reflect upon the fact that I guess you scored a victory today. Metals closed above a value that we've been trying to get to for, 7 years now.